Hi, thanks for tuning in to our MMG weekly recap. So here we are on a Friday, and the big news of the week was about inflation. That both the CPI, the Consumer Price Index, and the wholesale or producer price index came in beneath expectations and mainly attributed to a retreat in oil prices. Remember, oil earlier this year hit $124 a barrel. It was down as low as $89, $90 a barrel recently. And so that nice decline in oil prices has given us a little bit of relief on inflation. Now, some folks are saying that inflation's zero. If inflation were zero, mortgage rates would be back down to 2%. Inflation is not zero. Zero was the month over month pace. So that means that inflation, the headline level, topped because energy prices rolled over, which is a good thing. But inflation is still is 8.5% on an annualized basis and still remains high. So it means the Fed is still going to hike rates, probably by 50 basis points next month. And if the labor prints come in strong or inflation, some of the other inflation numbers next month don't piggyback this and show that inflation is topped out, we could go back to a 75 basis point rate hike. But as it relates to rates, we have to look at where we are. I mean, the 10-year note is at 290, call it 285 to 290, well off the peak of 349. Remember, when interest rates change, long-term rates started to decline immediately upon the Fed imposing a 75 basis point hike in June, the largest of which in 1994. So you're talking like 28 years. So it was remarkable that long-term rates actually peaked the minute the Fed imposed that large rate hike. So now next week, we do have some reports that are important to follow. Some housing numbers, retail sales, that's going to be a big print. You can see here, we're not looking for much of a number there. And we're going to look at the health of the consumer, right? Some of the things that we're concerned about at Mortgage Market Guys is savings rate is declining very rapidly and people are putting on debt. So while everybody says we're kind of hunky-dory, the bond market is saying something else. Seeing yields, long-term yields come down is a suggestion that the Fed's not going to be able to go as far. And that's what's giving us a lot of uncertainty and volatility in the mortgage business. So hope you have a great weekend. Be safe, and we'll talk to you soon. Bye for now.